Hey guys, welcome back to Markets with May. Sorry about that, had something in my eye. We are going to talk tonight about Tesla, and obviously the stock is trading down crazy in the aftermarket, and we'll see how it goes tomorrow. Now, do I think this thing is trading down tomorrow? Probably, yeah. Do I think that there's things that you should consider if you are long the stock? Yeah, I do. There was actually a lot in this earnings call that I think will go missed. I'm going to go ahead and bring up off the screen to say hello to everyone before I get into it. David is with me. Hey, David. He's going
Hi.
to join Karula. I know a lot of you guys miss him, so I always try to think about ways to weave him into the mix of things. I'm going to take
Hat,
you off
hat
screen.
tip, hat tip.
Hat tip.
Right.
But we're going to go through Tesla. Past performance is not indicative of future returns. I definitely have positions on Tesla. I am long-term long this stock, but if you are a member of Gurula, I got a heads up from them that maybe consider puts. And also, I was also concerned about it a bit. My position size is pretty small though at this point, and I want to tell you why I'm still going to be very long-term this stock. Um, let's see. I want to show you guys this is what happened. I'm going to go through briefly on what happened on earnings. And what everybody's reacting to is the headline numbers, which were terrible looking, to be honest. You had revenue up 24%. And then down here, you have EPS, net income, and EPS down over 21 to 24%, name your favorite. And then EBITDA down 15%. And free cash flow, which is kind of important for any manufacturing company, down 80%, meaning they're using their free cash flow. And we all know what they're using it on. They're using it to lower price. And okay, the story ends. The reason you can't get too you're a long-term holder, especially if you're going to take a massive capital gain on it, is because of why they're doing it. Now, a couple of things I really want to highlight. Let me just try to increase this in size so you guys can see it. Right here, energy generation and storage revenue up 148%, service and other revenue up 44%. What is that? This is actually going to become an increasingly bigger size of their total revenue. And I know some of you guys are probably like, you're smoking something because it's only like, call it, it's barely kissing 25% of revenue right now. But what he said was extremely relevant. And it had to do with this idea that what he is interested in long term is really having almost a SaaS like model where he really makes more off of all the other stuff he's charging you to have the car. And he says that that's a fair trade-off because of all the innovations that they're doing to the car that will be available through download, not by having to get yet another piece of whatever it is. In a lot of ways, that means that your car, which is probably the second biggest purchase a person does on the regular, is going to be kind of like a house in that regard. Now, let's actually talk about why he thinks he can do that and what's going on there. But I do also want to cover some of the energy usage as well. There were two other slides that may have gone missing, and then a bit of discussion. First, well, let me go back. First, let's actually look at how many cars they've increased on sales here. You've got an up 84% on leases, up 36% on total deliveries. That's a big deal because it's part of his thesis for what he's actually trying to do. Then here we can see there is this full self-driving stuff that he thinks will be long-term, what adds value to the car and brings your existing capital spend up. But more importantly is this little chart on the bottom right, which is that his annualized cost is down 30%. Okay, I'm dragging this out, but there is like a big punchline at the end, so stay with me. Then you've got energy storage, which includes all of the infrastructure build that's going on right now, just up 360% on deployment year over year. And then service revenue is going up and up and up. And that is a combination of all of the stuff that he's doing as relates to the car. And then he makes this amazing, important point about him versus all the other legacy manufacturers. So this is why I entitled this, he's taking a run at the end game now early. Oh my goodness, I'm having some connection issues. Hopefully, you guys can still see me on the other side of this. Um, what he's saying is that essentially, oh no, Wesley, can you see me now? Type in there. So, what he's saying is that what's going on with Tesla is that if you, the other auto manufacturers, the way they actually make revenue, which I've said in other videos, but it's really clarified in this particular Tesla earning call, the way they make their money is they sell the car itself at almost a zero margin. You know, sometimes they even take a mini L on it if they price it just wrong, which we can kind of see in Ford's numbers from last quarter, which were actually cash flow negative. Okay, and they took a L on the quarter for net income. Okay. They make their money off of people, off of a combination of financing, interest income, and then they make it off of service revenue, which includes auto parts and then the dealers actually paying whatever it is they need to pay. That's how people make money off of legacy auto manufacturers. He doesn't need to do that because he actually makes a margin off the actual car itself and he doesn't have the financing business. And he doesn't intend to make a ton of money off of auto parts, which is what everybody else makes their money off of right now. That's not his end game. But he does intend to make money off of the software upgrades and other things that you'll want to add on to your existing car so that you have a long-term cash flow off of every single sale that's made. Part one. Part two is that because everybody's always been like, they're a fraction of the market, they're such a small piece of the market, who cares? Well, let me tell you where that plays in is that because he's such a small portion of the market, by pushing right at this minute in history, he can try to build out the number of cars and by making it more affordable. Now, what does more affordable mean? More affordable means lowering the cost of the car, realizing that, like we've said in other episodes, he's one of the few that actually has access to that lithium as well as a few other things. He's clearly managed the supply chain better. But, and this is extremely important, GM financing, companies with a financing arm and a rising interest rate environment, that's a tough place to be. And I'm going to tell you why. Because they don't actually, the financing of the finance business doesn't come off of deposits like it does from a bank. It comes off of debt. They're going to have to actually go to the capital markets as prices are increasing on their cars to get more debt to sell the same amount of cars. Okay. That's what actually has to happen. So that's part of the reason why he's pushing right this minute against the legacy auto manufacturers. And some people called him out on it flat out. They were like, but they suggested that he was trying to push the other AV manufacturers. And he's like, nah, dude. So I'm sure that that's what he's doing. And on top of it, the other interesting thing associated with it is one little phraseology that he said. He said, there's going to be a point at which EV cars from a total cost basis is the only thing that will make sense. Like, it will not make sense for you to buy, even though there's a lot of people that love gasoline cars. I've got no skin in that game, but it just won't make sense for you to buy anything but EV because of the nature of what's going on there in that dynamic. So that is what's going on right now, is a strategic move to try to really push aggressively against the auto manufacturers, knowing that they depend on the debt capital markets very differently from the way that he does. He does not, because if you look at his he has a net cash position, not the other way around. And so with that, I'm gonna bring David up because he was the one that, and I gotta, I tell you, you guys got to check out Gurula. They definitely help me out all the time. The heads up to just buy some puts and remind me of that alone was worth its weight in gold. So definitely check out Gurula and see if there's something that makes sense for the way that you're investing. What's up, David? How you doing, buddy?
Oh, hi, May. Thanks for inviting me.
Always.
Yeah, he's just on the call. He said stuff like, we could price cars at zero profit and still survive.
Yeah.
I don't understand that.
Yeah, it's the long-term cash flow that he gets off of it, because he believes that he can continue to charge any number of things, because right now the other legacy auto manufacturers do exactly that. He's still positive cash flow he's been like, relative to the legacy guys, he's been making money hand over fist. We know that because we look at the margins every single quarter, right? And that's just, and the legacy manufacturers have really benefited from from low interest rates, 0% rates, more or less, right? Because their cost of financing and then flipping it back to you has been fantastic. To give you a sense for it, super prime right this minute, Ali Financial just reported, and I listened to that call because what they're saying is relevant to a whole host of things within autos. They're getting on super prime. So we're talking their average rate is 8 to 10 or their average spread is I think 10%, meaning they maybe issue a rate of 10%, they keep 8, something like that, right? That's crazy, crazy good. That just has to do with where they got their financing from for those loans to begin with. Now, the other auto manufacturers, I don't know how they're going to do it because right now, given what's happening in the marketplace, there is limited appetite. There's still appetite to buy the loans off. So, right, GM financing lends a bunch. They get basically the capital for the purpose of lending. Use of proceeds is lending, and then they lend it out like crazy. And then they got to move it out. Like somebody else has to buy those loans, and it's going to be a funky environment. Now, this is new car sales, which new cars have still continued to increase in price 2%, all the while Tesla lowering their price. So if he can just push competitive advantage while he's ramping up production and get more EVs out there, he does put them. It's not. I mean, what's the timing on that? At least is not a quarter, so we could still see Tesla trade crazy nasty for more than one quarter.
Yeah, and it seems he is a lot of the margin is FSD, which the people I talk to that have top of the line Model X's, the FSD doesn't even work correctly. So
At this point, it's
what?
software though. So it's software though.
But it costs $15,000 to put that in your car.
But if you don't have to buy another car, that's
Right.
what he's banking on. That's what he's banking on. He's like, look, if I have,
But
if
May,
I
it doesn't work. It doesn't work properly.
it doesn't matter because it's not the game that he's playing isn't for right now. He needs the scale. He needs the scale for the data. He needs the scale for the EV build out. He needs the scale for a number of things. So what he'd rather do right now is make no money on the cars, scale it out, then in a year to 2 years, push against the system then by just down and then sell the software because he thinks that GM and Ford in a rising rate environment are going to be crippled, as are the other legacy autos. That's what I think he thinks is going on here.
Also,
Because that 15,000 would be pure margin for him because since most of it is already,
I know,
like
but
his
it's
R&D
not.
cost is sunk.
Well, he's got a completely. I mean, I don't know the people that have the Model X's, which is the top of the line. It doesn't work. The FSD
It
does
doesn't
not
matter
work.
that it doesn't work. Look, he's turning the car into an app store. That's what he's actually building
Right,
now.
right. But the apps need to work.
Correct. But you got to think about it this way. Would you rather, right this minute, knowing that your competitors cannot sell cars in a meaningful way, would you rather continue to sell at the same pace or would you rather continue to have that 50% growth rate that he's shooting for every year so that you can scale up?
Yeah, that's another thing. He's trying to keep that growth rate up by marking the cars down to zero profit. And I don't know.
I think it's the right call.
I don't know. It
It's a
just
little,
seems a price war is a disaster.
I don't think it's a price war because I know for a fact GM and Ford can't do it without taking massive losses. That already showed in the previous quarter. If they tried to lower costs right now, GM and Ford would be in so much trouble if for no other reason than the financing arm of each of those businesses. This is not a one quarter trade. It's not like I think the stock is trading up tomorrow necessarily.
Right,
I
right.
have no idea what the stock will do tomorrow, to be fair. But do I think it's the right strategic call if you're actually running a company, not for investors, but for the long term health of the company? It's not the worst call. It's a little bit like if you think about how iPhone came out, the App Store didn't show up until iPhone 3 in 2008. The first iPhones did not have an App Store. And it was the App Store that necessarily is the bread and butter of like the long term revenue, even off of the resale of older phones.
Yeah, and eventually, I mean, the multiple, what's it, 40 times? So that has to contract. It's a car company. No, I know you're saying it's an app store in a car, but that multiple has to come down.
The multiple right now is, you're saying it's 40? Is that on earnings or is that on EBITDA? You can't take earnings because there's too much cash on balance sheet, right?
Right.
So if you want to give them no credit for the cash, then yeah, you can use earnings. But if you want to give them credit for cash, I think you get closer to like 32 times.
Yeah. Okay. Well, do you think that's fair?
Yeah, I do. Given where I think it takes them, I do.
Right.
I mean, do I think it trades down tomorrow? Yeah, the whole street is going to have to process this. It's going to take a while. Brandon. All right. So Brandon agrees with you and thinks I'm nuts, but just give it time because the thing is, if realizing that the cars right now that Ford are selling, some of them, just even the trucks are at 80 grand. Who has 80 grand? I mean, like who has the at scale? Okay. Remember, this is 80 grand at scale. This is not 80 grand. Like it's like, it's insane what some of these cars are going for if your average income is not anything close to what would justify that. I am not buying Tesla. I have actually, my position is what it will be. I will probably protect my position over the next 2 quarters.
Yeah, and I think I don't know. It's kind of a cult, a little bit of a stock, and I still think he bought Twitter so he could sell Tesla stock. I mean, and he really didn't want to buy Twitter, but the judge
Twitter's going
made
to be
him.
profitable this quarter, right? This coming quarter.
Okay, okay.
My suspicion is after Twitter becomes profitable, like, it is a privately held company. He could actually buy back his own stock. Given the trajectory of what he wants to do with it, I don't necessarily think it's the like I said, do I think this thing trades down tomorrow? Yeah, because number one, I don't think people were expecting this kind of result. And number two, I think the street has to absorb all of this like crazy. For sure. Do I think it's a short or do I even want to get involved in shorting it? I'm too scared to because of what his vision and ambition is for the next 12 months. Does he achieve it in 6 months? Does he achieve it in 12 months? I have no clue. But do I think that Ford and GM are going to get pushed hard on this pricing and really have to come up with some kind of plan? Yeah, I do actually.
Okay, let me ask you this: a margin going down. I mean, if he cuts prices even more to keep his market share, right, or to expand his market share, the margin's going to keep it compressing, correct?
I don't think he'll need to. That 36% increase is in one of the weirdest times within the marketplace. I think he actually can stay flat and then just monitor what happens. He does have raw material costs also coming down. This
Yeah,
is
he's
going to be a
cut
quarter by
price,
quarter thing until you see what happens.
and these last few prices would be second quarter.
Yes.
Okay,
So you need to, so like this quarter, you still don't have all the price declines, right? So you
right.
still show operating margin positive on this. And I think throughout all, you'll see it's not like he's dipping into the negative like the legacy guys are going to this quarter, right? We're still seeing operating margin of 11%, which puts him in line with legacy. But in fairness, legacy eats all of that in financing. He just gets that in cash, right? So if we go back to here and we look at this,
I
he's at
mean,
11%.
he's got huge competition in China.
Doesn't matter. He's got the rest of the world.
Okay, but he does a lot of volume in China. I mean, there was a car show, and they didn't even show up in Shanghai.
Yeah. I mean, I think that's overstated. Most of his cars are not sold in China. That's not true. Is someone saying that that's true? China
No,
itself does a lot of
I,
volume, but
I think they have a huge market in China.
China has a huge market. That statement is true, but Tesla trying to go after Boyd and all those others, that's probably not the case. That's not the case. If anything, he's got enough wood to chop just off the North and South America and Europe. Yeah, that's exactly right, Trend Board. I mean, I think any company doing too much business in China right this minute. I mean, in fairness, it's also the case, by the way, that so do GM and Ford. They just own 45%. They're not able to own a majority ownership for the businesses that they own in China. And in fact, most of the EV vehicles that are stated in the GM numbers are all manufactured by the subsidiary that's actually Chinese. But I haven't seen evidence that Tesla's trying to, I mean, I've seen evidence that Tesla's trying to sell cars in China and Hong Kong, but I haven't seen evidence that they're trying to gain market share in a big way. Mostly what they're just doing is trying to stay pari passu with the share that I think they've had. Most of the work that they're trying to do to gain shares in the US and Europe. And if you think about it, those are easier competitors. Remember,
Yeah,
it says every single quarter, it says on the 10K that that's mostly for export,
right.
the Shanghai manufacturing facility.
Well,
Although,
maybe by you may be right, but I don't like what I've seen. The past it
here, I'll
ran
show
up
you.
to 108 to 217, and then nothing. I mean, straight. I mean, 40 now it's 40 points lower than that. To
Yeah,
me,
no, I mean, the
if
stock's going to
it
do
was
crazy
really that
stuff.
promising of a company, it would have held in the 200 190 range.
I mean, I think people don't understand. I think there's a lot of haters of Tesla is really what it is right now. Even Google's got a lot of promise as well, and I mean that's really unfair. It's down in line with everything else from last year, and it's rallied just like everything else from last year. But if you look at it right here, just to show you, since our Shanghai factory has been successfully running at full capacity, we do not expect meaningful increase of weekly production run rate. We launched sales in Thailand, a new market supplied out of Shanghai. Thus far, the reception has been very positive. Giga Shanghai remains our main export hub. This is what everybody keeps missing when they talk about China and how they're not doing well against China.
And
Look,
this cyber truck, I don't know. Seems like a myth.
I mean, all of these things this is going to be quarter by quarter, but
Have you seen that truck?
I have. I don't know
Okay,
what to think about it because I'm not. I mean, like I'm a Ford truck girl, but at the same time, do I think it's awesome? Sorry, I grew up in the South. You got to pick a side, Ford or Chevy. You got to pick a side.
right.
Although fair and square, my dad is a Dodge, so it is what it is. But look. What I'm saying is that is it going to be chopped? Remember, he's not running the company just so that the investors every single quarter can get what they want. He's more running the company for the long-term health of the company. And I was wondering if anyone right this minute would take advantage, not even just in autos, but would take advantage of having a stronger position to really push against their competitors and see if they could, number one, take share, but number two, really change up the chessboard on the other side of whatever's going on. And Tesla's definitely taken a run for it, but this will be multi-quarter. I mean, the guy's made good on almost every promise he's made. So yes, the stock is trading down. Okay, let's not get confused as to what I'm saying. But do I think that just ignoring what he's saying about what he thinks he can do for the future of that automobile is smart? Eh. We're talking about Elon here. If it was any CEO, it'd be easier to be like, that guy is so full of it. No way.
Do you think, I mean, Ford, GM, BMW, Mercedes,
I think they lose
Volkswagen,
share.
they're never going to make it?
Yeah, I do. And it really
You
has to
don't
do
think
with
they're going to make it?
no. And I think that the reason that they will continuously lose share is because of the new way that the gigafactories are making cars. He will fundamentally always be able to reduce the price of his cars and they will not.
And he talks about the robo taxis. He loves that. So I don't know. That seems like a pipe dream to me.
Look, he's reduced the cost, even though he has a
He
higher
says the
operating.
Model Y and Model 3 are robo taxis.
Yeah. Well, I mean, it doesn't matter one way or the other. The fact is this. The facts are very straightforward, right? He has had a 26% operating margin for some time, and yet he's reduced his costs 30% during that same period of time. This is not like that is fact right there. Now, on the other hand, have the other auto manufacturers been able to do that? No. You've seen declining operating margins and also zero, like an operating loss on all their EV. That's the facts.
Yeah, I think the canary in the coal mine is FSD. Just that has a, and he cut costs because he only wanted to use cameras, which that's the least efficient way to do FSD. I mean, there's lidar out there, but he stopped that because it costs too much.
I don't know. I mean, I don't have strong feelings about that.
Okay.
I mean, I think he talked about it on Investor Day ad nauseum. I don't think he's wrong for the way that he's trying to run his technology.
Yeah, cameras don't work in weather, and they don't work in say when it's something gets in the way. I mean, the camera will. I mean, it'll block your view. Guys are telling me they'll be exiting off a ramp, and the car will. I mean, on FSD, and the car will turn back to the left. I don't know. It's really
I mean,
kind
if
of
you fundamentally think, look, I get it. If you fundamentally think that he can never get the autonomous piece working,
yes.
by all
Thank you.
means. If that's what you think, then by all means. I think he does get it working. I just don't know the timing of it.
And there's
And I think
regulatory.
what's well, once he
It's
gets it working, it'll just be the timing of it. Just remember, there's a lot of different technologies that have faced regulatory scrutiny that we now use all the time. Not the least of which is what you call it, the speed control, cruise control. Highly disputed in its day.
right.
Highly disputed in its day.
Okay.
But even without that, realizing all the other stuff that he's doing, I think it's the right call to push his competitor. I think it's the right call. He can reduce costs, they can't. It's actually as simple as that.
Oh, I love reducing costs. Yeah, like lithium is, yeah, it's cool, but I'm talking about the FSD that that's his margin right there. And that he's
In the
betting
future,
the house on that.
no, he's not. He's still at 11% operating margins this quarter, which is, by the way, higher, not lower.
Okay, May, love you.
All right. Anyways, take care. Good luck tomorrow, guys. Make sure that you hedge your positions. Bye.